Assalamualaikum, Farihan. Nice to meet you. Great to see someone from the banking industry. Oh, wow. Thanks for joining in, Khalid from Syria. That's one benefit of using Zoom calls. We can get people from around the world. Okay, it's 11:05 on my watch. So I'll start the talk itself. And for those people who join later, they can join in and watch the recording for the earlier parts. So thank you everyone for coming in on this day. So what we'll do here is a blockchain 101 session, subtitled Into a Rabbit Hole of Money, Decentralization and Smart Contracts. So before we start, can I get a show of hands for those of you who are familiar with the controls? Raise your hand if you have heard of Bitcoin. All right, so I assume those who didn't raise their hands are more because you're not sure how to control, how to use the raise hands function on Zoom. And for those who have raised their hands, how many of you know the difference between Bitcoin and blockchain? All right, and since there's not that many, I'm just gonna run through the rest. How many of you have a crypto portfolio or even know what that means? How many of you have a blockchain wallet? And how many of you have used a smart contract? So let me see, I see a total of 4 people. 5 maybe. Okay, so that's cool. So because there's a majority of you who haven't raised your hands, so I'll make sure to go a bit slower so that you can keep up. So, all right, I'm gonna turn off annotations because I can see there are people who are playing around with it. Okay, yeah, and maybe we can keep that for the Q&A session for you to write down your questions. A quick introduction to myself. My name is Harith. I work at Etherscan, which is the leading block explorer for the Ethereum blockchain. I'll explain more of what that means later. Before this, I worked at Hello Gold, where I was the head of data analytics and was also one of the people who set up the token sale for Hello Gold that raised the equivalent of $5 million US, or what's also called an ICO. And for the last 2 years, I've been an organizer of ETHKL, which is a meetup group that is focusing on the sort of technological aspects and use cases of the blockchain, primarily the Ethereum blockchain. And we focus on those things and not so much on, well, not at all on the trading or making money side of things. So if you're more interested in trading, there are other groups you can join. But if you're interested to understand the technology and how to use it, we welcome you to join our meetup group. Right now, we do once a month on the first Thursday of the month, a community meetup, and we're doing it on Zoom because of the current circumstances. But when the things are more safe, we will open it up to physical meetups as well. So to give a brief overview of what I'll cover, first I'll give a free introduction of what money is and what decentralization is, and then talk about Bitcoin and certain features that make it up, and go on to Ethereum to explain a second iteration of blockchain, and describe some of the local companies and communities, and finally give a so what, why it matters to you as the listener. Let's see. So I use the word rabbit hole because for those of you who are familiar with Alice in Wonderland, you'll know she fell down this rabbit hole into this world that is completely new and very deep and fascinating. That would be the experience you will find once you go into the blockchain space. You'll spend countless hours in front of your phone or your computer, opening new tab after new tab, trying to read up on new fields. So don't be too concerned if that becomes your experience, because that's what happens to all of us in this space. So before I start, let me see if I can just remove this. Okay. Um, so before I start on everything, first I have to clarify some differences between Bitcoin and blockchain. So for people who don't really know what the difference is, like you've heard the two words used at the same time. So if you can think of it as a Venn diagram, the larger set is the distributed ledger technology. Within that, one of the technologies that's used is the blockchain, and Bitcoin is one of the blockchains that exist. It's the first blockchain, and why we will cover it to begin with. So a good analogy to look at it is to compare it with the technology of transportation. So transportation is the entire technology. The car is one technology that covers transportation, and a Toyota is one of the brands of a car. So think of it as Bitcoin being one of the cars that exist. And another thing that people talk about is cryptocurrency and what the difference is between Bitcoin and blockchain and cryptocurrency. So first thing you have to do is to zoom out and understand that it's not just currencies, it's essentially crypto assets and assets in general. And within crypto assets, you see a large different segments that make it up. So you can have a crypto token, which is how, like, let's say you go to a casino, you have tokens that you can use, or you go to your school sports day and you can use the voucher as a token to pay for items. There's also crypto security, which are tokens that represent ownership of a stock, for example, or a bond. And lastly is cryptocurrency, which are tokens that represent currency. So Bitcoin is a specific example of a cryptocurrency, but there are many other types of crypto assets that exist. And lastly, on this part is the difference between Bitcoin with a capital B and Bitcoin with a small b. So Bitcoin with a capital B is the technology itself. So think of it as the car, and Bitcoin with a small b is the currency that you use. So think of it as if you have a car, it's a very good technology, but to be able to use it, you have to enter fuel inside the tank. And without that fuel, you don't have the currency to move the car. So without the currency Bitcoin, you won't be able to leverage Bitcoin, the platform. So here is where I begin the actual preamble. So the first thing that we want to cover is what is money. And if you go to any economics class, you will always hear these things. It's a store of value, it's a unit of account, it's a medium of exchange. I won't go too deeply into this because you can go on Wikipedia and understand it if you don't. What the economics classes generally don't cover, or at least on a high level, is that money has to be of a limited supply. It has to be scarce. And it gets very easy to understand this if you think about how if someone created an internet money and literally they can print new coins every minute, every hour, then very quickly there will be no use for that money because the value will go down as the supply goes up in an infinite way. And a very important thing to understand on money is that money isn't the physical item that represents it. Money, as we see in the physical world, is just a representation of value. And what do I mean by that? So to paraphrase a quote from the Game of Thrones, value resides where men believe it resides. It's an abstract notion. It's not a physical item. Much like the most important things in life, like religion, love, politics, there is no physical item that necessarily represents it. It's what's called a social belief, a shared belief or a social story that we tell each other. And it's only as powerful as the sharedness of our belief. And if we think of money, the first thing that comes to our mind are things like the paper US dollar, the ringgit, gold bars, or for the more tech savvy of us, it's now digital numbers on the screen, right? On your e-wallet or your online bank account. But these are by themselves not money. These are just representations of money. And to give examples that are not sort of general for people, if you are in a prison, then cigarettes are used for money. if you're a kid on a playground, maybe 10 or 20 years ago, you use Pokemon cards as currency. And people in various cultures from a long time ago would use shells as their form of currency. So just because we are conditioned to use the fiat currency or the national government currency like the ringgit, it's not the only physical form of money out there. There are many other physical forms, and we have to first be able to separate the physical form of money from what money is in actual fact. And to give examples of how money isn't the physical form that it is. So this is the Bolivar, which is the currency of Venezuela. So some of you might have heard that over the last few years, their inflation has been in the millions of percentages, such that people are more willing to use the paper currency as origami handbags or for drawings of cartoons. And by doing that, that piece of paper has more value to it than as currency, because the paper itself, the physical form of that currency has diminished in value because there was so much printing of that money that went on. And you might think that that's a very foreign example, but for the Malaysians here, you might, if you are of a certain age or if you have family members who are of a certain age, you might be familiar with this thing called the duit pisang. So what that is that when the Japanese military occupied Malaya back before our independence, they enforced the use of Japanese dollars, which is called duit pisang because $10 had the banana picture shown on it. So what happened was people would only be allowed to use these duit pisang to transact. And imagine you were a farmer. Let's say you're planting your own bananas on your own farm, and you've been getting paid in this duit pisang, and you've been saving it to sort of increase your wealth. And then suddenly, on the last day that the Japanese military was in Malaya, they left, and just like that, the very next day, the value of the duit pisang disappeared all at once. So all that savings that you had of duit pisang, let's say you had $1,000 Japanese dollars, would have just magically disappeared into thin air, and all that wealth goes away, even though the physical paper still exists. And that happens because the shared belief amongst people in Malaya had gone into the value of duit pisang because the Japanese military wasn't there anymore to enforce it. If you're interested, you can check out this website called WTFhappenedin1971.com, and you can see a lot of official statistics that show of our current modern economy and how things have gone out of whack. So for example, the CPI, which is a measure of inflation, has gone significantly up after 1971, which is when most governments went off the Bretton Woods Agreement, which is to take off the value of their currency from the gold standard. And it's actually very poignant, very iconic, because the very first block on Bitcoin that was ever mined, attached to it was a message that said, "Chancellor on brink of second bailout for banks." 3rd January 2009, The Times. And a lot of people got attracted to Bitcoin in the first place because of its sort of rebellion against the use of national currencies, because national currencies kept being used to, kept being inflated, kept being used to support companies that were too big to fail and not for the average man on the street. So that's what money is. And if you can't remember anything else, I hope you are able to remember that the main part is that money isn't the physical item that represents it. Money is a shared story between each of us in a society. So the next item is decentralization. For the Muslims here, I like to give this example, which to me encapsulates it perfectly. For those of you who know, you know that the Quran wasn't this book that fell down from the sky into the hands of people. It was a bunch of verses that were memorized by many members of the community. such that there were thousands at one time, even in the early stages, that memorized the Quran in the exact content, in the exact order. So that if Harith were to come in and say that, hey, I want to add one verse there that says, Harith is handsome, and I'll pay you a lot of money for it. If there was 2 or 3 people, it would be relatively doable for me to do it. But the more people there are that are fact checking each other to see that their memory of the Quran is complete, the harder it becomes. And if it goes to 1,000, it becomes exponentially harder. And if there are millions of people who memorize the Quran, then it becomes pretty much impossible for me to be able to bribe every single one of them to coordinate and add just this one line that says Harith is handsome. So it also applies for the hadith, if you're familiar with the term of mutawatir, and you'll be able to grasp the idea of decentralization very quickly. Basically, it's to be able to sort of trust in many, many members of a community instead of just one trusted member. Another example is that of the wedding. So other than this fairy tale celebration of a happy ever after, traditionally, cultures have created weddings to be able to fact check each other. So that if Harith gets married today and there's 200 people that attended the wedding, and then next week, if Harith goes and visits a next door village and one of the 200 sees that Harith is out there with a different woman who was not the woman that he was married with, then that community member can highlight it to the rest of society so that we can monitor Harith's behavior and he can behave in the correct behavior for the benefit of the whole society. In contrast, if I was to get married with just one witness, with just one imam or priest to witness it, then the chances of me being able to get away with cheating will be higher because there's a lot less people who are able to track my behavior. And a very modern example, for those of you who've used both Microsoft Word and Google Docs, you'll understand the huge difference that Google Docs confers over the Microsoft Office use. So if you use Microsoft Word for, let's say, a college project or teamwork for the office, you'll know that you can't sync at the same time. So when someone makes an edit, they have to save it, put it on a shared folder, and wait for the other person to then edit their part of the work. And if I were to edit it and someone else was to delete my work or change it to say something that's completely wrong, it's difficult for me to pinpoint who did it and how it was done. But if things were done on Google Docs, then first of all, everything's done in sync in real time. So I can see whoever is editing. And if they delete my part, I can see that they're doing it. I can also check edit history very easily. So not only does it help to fact check each other to make sure we're doing things in the right way, but also it's much faster because now we can edit everything at the same time. And how it works is there's no real magic behind it. What Google does, it relies on the cloud, on many different servers around the world who will all update whatever changes that were made in real time as we make it. And that's very important to understand when it comes to Bitcoin, because if you combine money and decentralization, then what you get is decentralized money. And if you don't know anything else about Bitcoin and you know just that Bitcoin is decentralized money, then I can assure you that you know more about Bitcoin than probably 90% of the people out there, and even many people who are owning Bitcoins already. So what does Bitcoin mean exactly when I say decentralized money? Let's go a bit more into what that means. So when we use the modern financial system, typically there is always a centralized third party that we trust. So if I wanted to give money to Hisham, who isn't in person in front of me right now, I can't give cash because he's not in front of me. And I have to say, mail it to him or use the internet to send it. But there is no way for me to know that that money has reached Hisham, because let's say I send him 10 ringgit, he can tell me that, oh, I haven't received that 10 ringgit yet. Maybe it got lost in the mail. So then I'll have to keep doing it and keep doing it. And in the meantime, he just takes much more than the 10 ringgit that he was supposed to get. And vice versa, I can tell him, hey, look, I've sent it. It should be on the way. I don't know what happened, when actually I've never sent the 10 ringgit. So, so there's a lot of friction when there's no trusted third party in the current financial system. And for the most part, it works. We rely on banks, so I don't have to trust Hisham and he doesn't have to trust me. But if I trust on a bank, let's say Maybank, and he trusts Maybank, then all we do is we give money to Maybank, Maybank takes it and gives it to Hisham. And it's not just banks, it's also currency exchanges, it's also companies like PayPal. But what happens is that these companies take a huge percentage of these transactions for basically just being a trusted third party, not for creating a product between the two of us. It's just to facilitate that transaction. And if we kind of consider an alternative, so right now, out of the about 30 people of us in this call, we could come up with an alternative to that financial system. So what we can do is we can all have a little notebook where we keep a ledger of each one of our balances. And every time a transaction happens, then all of us updates it and we confirm it to each other, let's say on the Zoom chat or on a WhatsApp group. So if I were to send 10 ringgit to Hisham, then all of us needs to like tick it off and say that, okay, 10 ringgit is deducted from Haris' balance and added to Hisham's account. And only when all of us have approved this transaction, then it gets recorded in this shared ledger between all of us. But you can easily see how that's not very practical. Even if it was only 2 or 3 people, it's going to take a lot of time and effort for us to do it. And we basically won't have any time to do anything else in our days. And as we increase it to thousands or millions of people, similar to the Quran example, it becomes exponentially harder to coordinate and becomes practically impossible to do. But what if we were replace the people with computers? Computers can do things much faster than any human being can. And it still sounds a bit crazy, but if you think about how we have now online streaming Netflix online or massively multiplayer online games that are much more heavy on your device, that's much more computing power than literally just updating one entry on a transaction ledger. So it's not that impossible when you use computers instead. So what Bitcoin does is basically it allows computers to become these people who are fact-checking that each transaction are being done the right way. And when there is a majority of computers that agree on a certain transaction or a certain block of transactions, then these transactions get confirmed. And very importantly, these sort of computer code that runs Bitcoin is based on open source programming code, which what it means for those of you who are not technical is that the code for Bitcoin is published online. So anyone in the world who understands programming or the specific language used for Bitcoin will be able to validate that the code does what it says it's supposed to do, and they can raise a flag if something in the code doesn't represent what it says it would do. And because there are thousands of programmers out there, they can validate that the code is doing what it's meant to do. And you can't update your code by yourself because let's say, again, I wanted to add Harith is handsome in the Bitcoin code. I can do that, but then I have to be able to convince all of the thousands of other Bitcoin computers to agree to use to add my line of code in there before it can be accepted. Otherwise, everyone else will just see that, oh, Harith's line of code doesn't match everyone else. So we're gonna ignore Harith and go with what the majority says. And by doing that, you make the system become trust minimized because you're not trusting one party or a few parties, you're trusting a lot of different people out there. And the more people there are in the system, the more decentralized and the more reliance on trust there is. So I'm going to go into some features of the Bitcoin blockchain, but if you have any questions, feel free to shoot it in the Zoom chat. If I feel like it's relevant for right now, I'll explain it. Otherwise, I'll answer it later on in this session where it might be more relevant. So a block explorer. So what a block explorer is what? Yeah, okay. So before I go on block explorers, the first thing all of us needs to understand is that blockchains are not anonymous. So if you've heard in the news about how criminals use Bitcoin to buy drugs, to do all kinds of bad things, and if you're a criminal yourself, you might be attracted to using Bitcoin. But I should warn you that Bitcoin and most blockchains are not anonymous. So that if you do transactions on there, in some ways, it's actually much easier to track you than it is if you were to just use cash. And what do I mean by that? So this is an example of a block explorer. So this is Etherscan where I work at, and it's an explorer for the Ethereum blockchain, but the same logic applies. If I were to enter this address, which is anyone's address, I can enter it into the search bar and on the top right, and no one will be able to stop me from seeing all of the details related to the address. So imagine if I can open up your Maybank account, enter your sort of wallet details, and I can see your whole balance, how much it's worth in US dollars, and your entire transaction history from the time the transaction was made, who sent it to you or who you sent it to, and the amount that was sent. It's actually really, really scary if you think about it. The only saving grace for you is that this address on the blockchain is not tied to any human identity. So this long string here on the top left is created randomly. You cannot customize it for yourself, so that if you were to create one, I wouldn't know what your address is. So even though I could try and enter random numbers, I wouldn't know, even if the address showed up, that that address belongs to you. But if you've ever done any transaction to me or to anyone that I know, then I know that, okay, this address sent, say 10 Ether to me. So I know that, and you told me you sent it to me. So I know that this address in some way or shape or form is belonging to you or related to you. And I can then go into the transaction history and click through the transactions across the different addresses, and I can see the addresses that are there. And if I know who owns those other addresses, then I can create a map and be able to track who did what at what time. And this is actually what regulators and governments around the world are doing currently to be able to track criminals who use Bitcoin and other blockchains. So yeah, so if you're a criminal, make sure think twice before you use blockchain as a way to transact. A good way to think about this is if you imagine a library and you walk up to the receptionist, to the librarian that is at the entrance of the library, and you tell her that you want to see the contents of this book on shelf 17A. And the librarian will show you the contents of the book regardless of which shelf it is on. Like you can take any book that's from any part of the library and the librarian will show you, and they will never stop you from seeing any of the contents of that book. Important thing to understand is that different blockchain protocols or platforms are their own libraries. So you cannot go to a Bitcoin library to see an Ethereum book, or you can't go to an Ethereum library to see a Bitcoin book. So next is the blockchain wallet. And the wallet is a bit of a misnomer. It's a bit of an unfortunate wording that people early on in the industry use, because the blockchain wallet isn't really like a wallet that you have physically. It's not something that you carry around with you. A better way to think about it is like a safety deposit box that's held in the cloud. So, you know, it's a box that you can store your family diamonds or some gold bars that you got from your grandfather, and it's held there in the vault, and you need to go to the vault, use your key to open it, and then you can take things out. Only difference is that this box is held in the cloud, it's on the internet, and a lot of people will refer to as their wallet is actually just the key to open up this box and take things inside. So if you go back to the library example earlier, then having a wallet or this key allows you to go to the librarian, the same librarian just now, and instead of asking to see the contents of that book on 17A, you can tell this librarian, if you have the key for the 17A shelf, that you want to move the book from there to 37B. And only if you can show that you own the key that owns the 17A shelf, will the librarian take that book and move it. If you cannot prove that you own 17A, then it will not allow you to move your book to any other shelf out there. So there's a difference between seeing the content and being able to move the content from one place to another. So what wallets use is this technology called public key cryptography. It's a very heavy subject. I'll suffice to cover just the high level part of it here. So public key cryptography uses two keys, your public key and your private key. So a good way to understand a public key is you think of the mailbox in front of your house. So if you want anyone to send you a parcel or a letter, say a parcel from Lazada, what you do is you tell them, hey, this is my address, please send it, please send that parcel to me. So a public key is something you love to share to other people so that they can then send you the parcel. But again, if you don't want, say, any suspicious people to know where you live, then you also want to keep safe your public key so that they don't know the address to your house. The private key, though, is both the mailbox and the key to open your house's doors. It's very important to understand that it's not just the key, it's also the mailbox to your house. So what would happen if I give you my private key, then essentially what I'm doing is I'm giving you a map with an X marks the dot to my house, and I'm giving you the key to open my door. So I'm essentially welcoming you to go to my house, open the door, take everything that's inside and move it to your own house. And no one can stop me once I've given you my key. And you hear lots of stories in the crypto space of people who either lost their keys or had it stolen, or even were married to someone and then had a divorce a few years later. And because while they were married, they were happy and they were fully trusting, they shared their private key with their spouse. But then after the divorce, the spouse can literally take that private key and take everything that you own inside your house. So again, it makes things much more scary, and it highlights that when it comes to the crypto space, you are your own security. There is no Bank Negara, there is no PIDM that will help you if your funds get stolen. There's no insurance. There's no Google support that you can email if you've forgotten your password. So you have to rely on yourself when you don't want to trust other people. And a quick note, on a psychological level, this affects a lot of people in the crypto space. So you can see a lot of people in the space become more paranoid. And yeah, so that's a topic for another discussion on the psychological impact. But very important thing to understand is that you are your own security. And if you ever want to enter the Bitcoin or blockchain space with your own money, make sure you fully understand what wallets are and how it works. So to briefly go over some major types of wallets, the first kind is what's called a paper wallet. So literally what you do is you go to a website that creates wallets and never stores these keys on their own servers. you create a paper wallet and it will create a simple image. What you then do is you print it to a piece of paper and that becomes your wallet. So the address here is your public key, is what you address, is what you share with other people. And the private key is the key that you never want to share with anyone unless you are okay with them taking all your money. And you never want to store it in a digital format, because if you've ever heard stories of how celebrities had naughty videos shared to the public, a lot of times it's because they thought they deleted it from their computer and then they sold it off or they sent it for repair. But what they don't realize is that even though you've deleted stuff from your computer, it still exists somewhere on your hard drive. So if you've deleted this digital copy of your private key from your computer, someone who later gets access to your CPU can still find that private key and now have access to your entire wallet. So you never want to keep it in digital format. You want to print it on paper. The best practice is you laminate it, keep 2 or 3 different versions and store it in different places, such that, you know, if you put it in your house and your house gets burnt down, there's at least one other place that also has that private key. You don't want to memorize your private key because it's a very, very long string of characters. And even though you think you have very good memory, if you confuse just one item, let's say instead of a 0, you remember it as an O, then all of your entire balance will be gone. So that's not very practical, right? Because if you want to be able to transact, you don't want to carry this paper wallet with you everywhere, because you might get robbed or you might lose it. So a better solution, and what most people will agree is the best solution for keeping most of your funds, is what's called a hardware wallet or a cold wallet. So in this case, it's held in a physical device. A lot of them look like a USB pen drive, and you have a pin to this, and the device is what stores your private key. So even if someone were to steal it from you, they would have to enter your PIN code, which you can now customize, before they can use the hardware wallet to take your money. And if you lose the hardware wallet, it's not the end of the world, because you can write down the private key, or in most cases, what's called a mnemonic phrase, a string of random 12 or 24 words in English. And that is what you store in your house, so that you can have your paper wallet at your house, but you can still carry the hardware wallet around with you if you need to make any transactions. For newer blockchains, like blockchain 2.0, you have what's called a Web3 or smart wallet, where the wallet exists in your internet browser or in your phone. And the website or the website doesn't store your private key or your password, so that you can still use the browser and use it as a wallet without having a risk of the website stealing your private key from that wallet app. Key thing to understand is it's still, a lot of these are very new, so it's still not as safe as simply putting it in a hardware wallet. So if you want to use a Web3 wallet, then don't put as much funds into it that you would lose your life savings if you lose it. So next is what's called mining. So this is something I find the most interesting, and it's not even the programming or cryptography part to it. But so mining rests on this thing called a hash function, which again is a thing from cryptography. It's very sort of deep, but at a high level, what a hash function does is that you can enter an input and the output is something completely different that is very difficult for someone to reverse engineer to get your input. So for example, if I were to enter a cat, the 3 characters CAT cat, I will get using this ketchup256 hash function, this very long unreadable string of characters. And if I were then to enter dog, I would see this equally long and equally incomprehensible string of characters. So that it's very hard for you to be able to reverse engineer the string of characters there into what I originally put in, like cat or dog. So a good analogy for this is to think of a snowflake. So a lot of people know that snowflakes are unique. Each of them are unique, but if it gets melted down, it becomes a puddle of water. And from a puddle of water to reverse engineer it to become the original snowflake is very, very difficult, practically impossible. So that's what a hash function tries to do, to make it very, very difficult for you to be able to go from the puddle of water to the original snowflake. And how does it apply to mining? So if you're, those of you who are familiar with stories like the Da Vinci Code or any movie that shows a bank robber trying to break a vault, so a lot of times what they would do is brute force the password, right? So let's say there's 5 characters, they would just very quickly enter randomly the different characters that is possible until they get the right answer. So what mining is are all these computers in the system that are randomly trying to guess answers until they become the lucky one that is the first to find the right answer that solves this very difficult snowflake puzzle. So to explain a bit better, so if you go back to the circle of computers just now that you guys saw, that all of us may own one of these computers. One legitimate question that some of you might have asked already is, if the only people that are transacting are me and Hisham, what's in it for any one of you to keep validating that the transactions are correct? Because even if it's done by the computer, so you're not wasting your energy, your sweat, keeping that computer running still takes electricity and still costs you money. So the beauty, what I find the most beautiful thing about blockchain systems is this game theory. So what the founder of Bitcoin, this so-called Satoshi Nakamoto, did was it created a system such that out of all of us who are trying to mine, trying to validate the system, even if we are not using the system for transactions, we would still stand to gain by mining, because by mining, by fact checking that the transactions are done correctly, we stand a chance out of the many people to be the lucky one to win the reward given to us. So even if the only people that transact are Vince and Hisham, I don't see any benefit to validating their transactions because I'm not involved in those transactions. But by validating, I stand a chance to win the new reward that gets mined, that gets created out of thin air. Then there is an incentive for me to still want to keep my computer connected to the mining network. So the word mining comes from the gold industry, where you're mining for new gold. So it's gold that gets created and added into the system that wasn't originally there before. These rewards are made up of 2 parts: the block reward, which is the new Bitcoin that gets mined, and the transaction fee, which is what happens when someone wants to make a transaction. If I wanted to send a transaction to Hisham, I need to put in a fee into the system. Otherwise, the miners will not prioritize my transactions. And that beauty that I mentioned, a lot of it is because of this adjusted difficulty. So on Bitcoin, a new block gets created on average once every 10 minutes. On Ethereum, it's once every 15 seconds. But the idea is that the more miners there are, then if the difficulty stays the same, then the chances of one of these miners finding the right answer will be much, it will take a lot less time because there's more of them trying at the same time. But what Bitcoin has done is that it creates an adjusted difficulty system. So the more miners there are, the more difficult the puzzle becomes, such that on average, people would still take 10 minutes to solve the puzzle. And in that way, we can keep this inflation of new coins being created relatively consistent and stable. So just a note for you. So this whole mining system for Bitcoin specifically is called the proof of work. It's a consensus mechanism. I'm not going to go into that in this talk, but you can read up into it by yourselves later. And a quick note on mining is that similar to that Quran example earlier, when blockchain new transactions are created, they are grouped into one block each, and each block that gets mined gets added into a chain of blocks, such that if I wanted to hack the system and say that this block that was 100 blocks ago, I wanted to change one line that said Harith received 100 Bitcoin from Hisham, I would need to be able to convince all of the 100 blocks that came afterwards the right answer. So the more blocks there are, the harder it becomes, not just the more people there are. So the difficulty to hack the system becomes more and more exponentially harder the longer that time goes on. So that's it on the mining part. Then a regular question that people will have in their minds at this point is, that sounds all very interesting, but how do I buy Bitcoin? So if you think about how you buy any product out there, so you could do what's called OTC, or over the counter. That means you find your friend. So let's say I find Hisham and I wanted to give him a loaf of bread or his piece of chicken, and we just do that transaction. But it's very easy to see that throughout human history, the OTC transaction isn't very what's called liquid, because it's very difficult for me to find someone who is willing to buy my product in exchange for his or her product at the price that we are both comfortable with. So humans created this thing called a marketplace. So that's, if you go to a market where there are 100 stalls, it's much more likely that you'll find someone who is willing to buy your product or sell their product to you at the price that you are all happy with. So similarly with the crypto industry, we have created exchanges, and there are broadly two different kinds of exchanges, what's called the fiat to crypto and crypto to crypto exchange. So a fiat to crypto exchange is where you can put in your ringgit and then you get Bitcoin or Ethereum. Within these, there are also two subsets. So what's called a broker, where they will show you what the price is that you are able to buy, and you just need to agree whether you want to buy it or not. So two examples shown here, Luno and Synergy, are licensed exchanges by the Securities Commission of Malaysia. So these are legal, so you can use these, whereas the others are essentially not legal. So opposite to the broker is the marketplace, where the website just acts as a platform. It's not the one that is doing the transaction with you. It just sets up the marketplace, and it allows anyone to be the seller or the buyer on that marketplace. So the two examples that I show here, Remitano and Local Bitcoins, are not licensed in Malaysia. So if you want to use them, use it at your own peril. So a second kind of exchange are what's called the crypto to crypto exchange. So these are where you can trade your Bitcoin or Ethereum for the thousands of other cryptocurrencies or tokens that exist out there. Typically, the fiat to crypto exchanges will need to be licensed by their local regulators. So they are restricted to only a few major cryptocurrencies that they can use. And if you want to buy some token that your friend or your uncle has told you about, most likely you'd have to go to these crypto to crypto exchanges to buy them. Quick note, this one on the bottom left here called Binance is an exchange that got created only in 2017, and within 2018, within 1 year, their revenue was higher than that of Deutsche Bank, one of the largest banks in the world. So that just goes to show how fast the crypto space has grown in the last few years. So why do I mention exchanges? I don't necessarily want to tell you how to buy. I don't want to talk about necessarily buying or trading, but the key thing when it comes to exchanges is to understand that exchanges are not wallets. So if you ever see anyone who says, I own Bitcoin, and you ask them, so where is that Bitcoin? And they say that, oh, it's on my Luno exchange account. Technically speaking, they don't own that Bitcoin, because what they're doing is they're trusting Luno to hold their Bitcoin for them. And why does this matter? Because imagine as an exchange, imagine it's a money changer, and you go up to this money changer and you want to trade your Malaysian ringgit for US dollar. So let's say you give in 100 ringgit and they're supposed to give you 25 US dollars. But what happens is you tell them, hey, I've bought the US dollars, but I want you to hold on it for me. So you can hold the 25 US dollars, and instead of taking it and putting it in my own wallet, I'm just going to let you hold on to it. And if on the next day, that money changer sort of office gets burnt down or gets robbed, or the owner kind of runs away and disappears, then all that US dollars that I've stored in there will also disappear. And because in the crypto space, there is no centralized regulator to help you, if you put your money with an exchange and they get robbed or they run away, then all of that money is gone and you lose all of it. So all these stories that people have been mentioning about how there are hacks, how Bitcoin has been hacked for hundreds of millions of dollars, the vast majority of them are examples of where exchanges have been hacked. So the Bitcoin platform itself has never been hacked, but exchanges that are holding on to people's money are what's been hacked. And it's very important to understand this part, because a lot of people say, oh, Bitcoin is not trustworthy, and even Islamic finance scholars will say, Bitcoin is not Sharia compliant because exchanges gets hacked. But people who say this do not understand how Bitcoin or blockchains work. The idea of exchanges is actually antithetical or opposite to the idea of decentralization, because now you are trusting a third party to store all your money for them, which is in effect is essentially just another bank. And even worse, they're not regulated. So please understand, if you want to buy your Bitcoin or Ethereum, you can buy it on an exchange, but if you keep those funds on the exchange, you are trusting the exchange with your funds, and you're not putting it into your own wallets where you are the one that's responsible for the safety of those funds. So that's it on the features of blockchain 1.0 Bitcoin. If you have any questions, again, feel free to shoot it in the chat, in the Zoom chat. Otherwise, I'll go ahead to make sure that we are on time. The next item is to talk about blockchain 2.0 using Ethereum as the example. And the big part to this is smart contracts. So if you talk about blockchain 1.0, it's decentralized money, and 2.0, it's smart contracts. And smart contracts sounds like one of these jargon words that's very confusing, like decentralization, that it's very hard to understand what it is. But if you peel it back to the most basic concepts, you first think about a vending machine as an example. So a vending machine is really smart because there's no humans involved. You can go up to it and enter and put in 5 ringgit and enter Coca-Cola. The machine will know that if you put in 5 ringgit, it will take it, return to you 3 ringgit, and return to you Coca-Cola instead of Pepsi or Sprite or any other drinks. And there's no magic behind it. There's no kind of unseen energy that's deciding how this is done. All that's been done on the back end of the machine is what's called conditional statements, or if-then functions. So it will check that if you enter 5 ringgit and if you press Coca-Cola, then it will release 1 can from the Coca-Cola shelf, and it will return to you 5 minus 2, 3 ringgit back to you. So these are all coded into the machine, and it just relies on a bunch of different if-then functions. So I see a question from Arif on how to create cryptocurrency. I will get back to you slightly later on that. So another example that people that will help explain smart contracts. It's another buzzword that people use, the Internet of Things. So one example that people use for this cool thing called Internet of Things is what's called the smart refrigerator. So one example that they always like to use is that if you have eggs in the fridge and you are running out because you've been using it, the fridge can tell that the number of eggs inside it is running low. So it will then automatically make a transaction to your a nearby online grocery store and buy new eggs for you and get it delivered to your house, so that you don't have to worry about remembering to buy eggs. The fridge will do it in a smart way for you. This is again relying a lot on if-then functions. But one issue with a smart fridge is that even though it's very smart and it uses this if-then function so that it saves you time, it is still using the centralized financial system that we are used to now. So you will still have to go through a bank and still have to go through a bunch of different third parties that might slow down the transaction and will charge fees for using their services. So what Ethereum does with smart contracts is essentially that it combines the decentralized money nature of Bitcoin with the if-then function of the vending machine. And at the core of it is that's all there is to it. So you can think of it as how when all of us moved from using normal mobile phones to smartphones, that explosion of functions, of applications that happened, that's similar to the explosion of applications that are now possible with blockchain 2.0. So with iPhones, you have the App Store where anyone can create any apps to do many, many different things that's beyond the function of simply calling or texting that mobile phones were most familiar with. And an example I like to use for Malaysians, because I think we will understand this a lot better, and also because it's controversial and controversy sells, is the idea of an election. So if you can imagine an election that's done on voting that's done on a blockchain. So I could go into the polling booth, and instead of entering the physical piece of paper, which the concern with doing that is that when I enter this ballot into the box, I don't know if behind the scenes, someone who is at the location is changing my vote from, say, blue to red, or from the red team to the blue team. So there's a lot of trust I'm putting into this election commission and various parties involved. And a lot of Malaysians, in the years before this, have raised this concern of how blackouts happen and how come my vote is not reflective. So if you were to do it online, some people might say it would be a solution, but online also brings its own problems, because if you were to do it on a website and the website is private, the code isn't open source, it's somewhere hidden, then you don't know if behind the scenes, the code is also changing your vote from red to blue or blue to red. So there's a lot of uncertainty there. But if you were to put it on the blockchain, and if you were to use if-then functions with a smart contract, such that the contract will check that, okay, Harith is trying to vote in this election. It will check that, first of all, Harith is registered as a voter. I am voting in the correct area that I'm supposed to vote in. I'm above age, I'm not a criminal, and most importantly, I haven't voted yet in this election. And only if these conditions are fulfilled, then it will take in my vote. And if any of these are rejected, then the vote will not count. And I can then check that the vote was properly done at any point in time. I can check on the Block Explorer and I can see that that wallet that was used for me is showing that I voted on one side and not another. So in this way, you can tackle the problem of trust in elections. So there are many use cases for Ethereum. I'm going to briefly run through all of them, and if we have time, you guys can ask me to elaborate a bit more. So one major example, because it's been in the news a lot in recent years, is what's called an ICO, which is a play on IPO, which is initial public offering. So an initial coin offering, you've seen the amount of sort of scams that exist in the system, I'm sure, of people trying to sell you this and that token that supposedly will change the world in this way or that way. What I will say from someone who is within the space is that probably 99% of them are scams, and 99% of them will also probably fail just because the things that they want to do are extremely new and extremely difficult. And if you look at the graph on the right, that's a very common chart of a ICO token. The current price is 90+% lower than their peak price. But what ICOs, the positive side of it is that what it allows you to do is that it allows you as an average person, a man on the street, to be able to invest in the next Google or Alibaba. Whereas with these companies, for the longest time, you wouldn't be able to invest in them at an early stage unless you were one of these rich, well-connected venture capital funds in Silicon Valley or in Shanghai or Beijing. And without those connections, you wouldn't be able to invest until much later when the Google is already big. On the flip side, if you're the entrepreneur, if you're the next Google, it's very difficult for you to raise funds if you're not in Silicon Valley or Shanghai. If you're in some random city in Malaysia or other countries, you don't have access to this pool of funds that's typical for venture capital. You can use this ICO technology to allow people from anywhere in the world to invest in you using just a website. So the technology itself is extremely powerful. And even though the use cases right now have caused a lot of people to lose a lot of money, but that technology, as it grows, as it gets tweaked and people understand how to use it better, will be the future of fundraising. And I can say this from my own experience, because I tried to use an equity crowdfunding platform, which is fully licensed by Bank Negara and Securities Commission. I tried to invest in a company that was raising equity. And so I went to the Maybank account that they sent me on their website. So I transferred money there. One day later, they told me that, oh, sorry, by the time I transferred my money to the Maybank account, their fundraise had already filled up and I was too late. So I didn't get any access into their equity, which is not bad, but I still get my refund, so it's not too bad. Although with ICOs, I can get it in a matter of seconds or minutes. But the worst part was that for me to get the refund, it took me, I waited and waited and waited, and only 1 month afterwards did I get my money sent back to my bank account. And if it wasn't because the platform was licensed by the regulators, I would have been sure that it was a scam. And in their defense, it's because the financial system that they're using requires a lot of third-party intermediaries. So it needs to go through some sort of financial party to check, some sort of underwriter. It goes through multiple hoops before that money can be sent back to me. And which is why that multiple hoops causes the friction in time. So just some example to see how the market has grown. So just in the last couple of years, some projects have raised in the millions of dollars and even in the billions of dollars purely by using the ICO technology. So I'm going to quickly run through some other use cases. I might need to skip through some of them. So a very sort of fantastical idea behind the smart contracts is what's called a decentralized autonomous organization. Again, a lot of jargon, but think of this example. So I'm sure most of you have heard of these things called a driverless car, where there's no driver that needs to drive, and how companies like Uber are thinking of how they can create a fleet of driverless cars so that they don't have to hire drivers to drive their passengers around. Not good for the drivers, but good for the company because they can save cost. Now, imagine if these companies like Uber are not just having no drivers in their cars, but they are also having no humans in running the company. And the company is entirely run by code, by software, so that the car that is being driven by the code also knows that when a passenger comes in and they pay using an online method, the transaction gets through directly to the company without any human to validate the transactions are correct. And when the car needs to send itself for maintenance, it will drive itself to the workshop, and the code will pay the workshop the amount of money. And humans don't need to be involved in the financial element, the HR element, or any other functions that humans are playing right now. This idea sounds completely crazy, and it probably won't be a reality anytime in the near future, but with the sort of potential of smart contracts, you can see on a theoretical level at least how it could be that. So I'm going to use a more realistic example next. So people who are familiar with crypto will know that using it as a form of payment is very impractical, because if I wanted to send a Bitcoin to someone overseas, it might be worth 10,000 US dollars today, but at the moment of me sending, it could go down all the way to say 5,000. And it's very unstable, so it's very bad for both parties in the transaction. So people in the space have created what's called stable coins, but a lot of them, instead of using decentralization, what they do is they rely on a third party. So like the exchange, they just park some sort of US dollars in this company's account, and they create a crypto token that represents those dollars, and people can trade those. But the problem with that is everyone's essentially trusting that centralized third party. But with smart contracts, you can create an algorithmic stablecoin where that stablecoin doesn't rely on any reserve that's held in a trusted third party. It's reserve that's held completely on the blockchain. And you can see throughout the history of this DAI stablecoin, it's been very close to $1 at all times. And with this, people can send each other cryptocurrency across borders, and without the fear of that currency that they're paying will be devalued very quickly. On this note, I'd like to mention another stablecoin, which is the Facebook created one called Libra. This is an example of a permissioned blockchain where the blockchain isn't open to the whole world. It's only open to a few players within the system. And so if I, as a person, don't necessarily trust Facebook, but I trust all these other companies that are within the system, then I've reduced my trust from just Facebook to, let's say, 30 of them. So as long as a majority of these 30 are not conspiring against me or against the whole system, then we can trust them instead of just relying on trusting only Facebook. Another example is what's called a community currency. So there's a project called Grassroots Economics. They have created local community currencies in Kenya that has helped people when giving charities in US dollars. They've put these US dollars in a reserve and then created local currencies. And by having local currencies, they empower the local economy. So people are trading with each other, and the impact of the donations get multiplied over instead of getting sent once and then disappearing. Another example, which is very new actually, is Reddit, which is a social network slash online forum. For those of you who are not familiar, only a few days ago, they released this community currency for two of their subreddits, for the r/cryptocurrency and r/Fortnite. So these two communities can now use a currency that's only meant to be used within their Reddit groups, and the currency isn't held by Reddit. It's put on the Ethereum blockchain so that no one needs to trust Reddit itself, as long as they can see that the transactions are recorded on the Ethereum blockchain. Another example is that of the personal token. So a couple of months ago, this NBA player called Spencer Dinwiddie, who currently plays for the Brooklyn Nets, he tokenized, not exactly this way, so this is not the legally correct way of describing it, but essentially he tokenized his NBA contract or the salary that he gets from the NBA and put it into a bond, such that you could invest in Spencer Dinwiddie, and by putting money in, you will get a bond. So the coupon payments on a regular basis, as well as the value of the bond itself at the end of the bond period. So if you can imagine how this could be applied outside of just Spencer Dinwiddie as a person, it could be applied to any athlete who wants to get a lot of capital upfront and reward their supporters with their salary as well as other benefits. You could see it being applied to, say, income share agreements. So let's say people who don't want to study want to further their studies, but don't want to take crippling student loans, they could create this token. So for people to invest in them so that they have the money to go and further their studies, and they can repay their investors later on over time, and many other applications for personal tokens. Another example, and which is very powerful to me because I came from the insurance background, is what's called a parametric insurance. So a company called Hurricane Guard, who give insurance to people who are inflicted by hurricanes. And one of the problems with these kinds of insurance is that when a hurricane happens and you get your claim paid out, for many people, it's too late because the hurricane's already hit you, your house and where you are. And if you didn't have enough money at that point in time, you're not able to move yourself and your family to a safe area. And whether or not you get paid the insurance, you might already be, you might have already died or suffered massive injuries by the time the insurance payout gets paid. But what a parametric insurance does is that the payout is made before the event happens. So in the case of a hurricane, using satellite technology, we can predict to a very, very high certainty that a hurricane will hit a certain location before it does. So if the insurance can get paid out to me before the hurricane hits my house, I can then have money that I can use to pay for fuel, to pay for necessities, and I can take my family out to a safe area and secure ourselves. So the insurance cannot just be used to pay in case of my suffering, but it can also be used to help me save myself. And that can all be possible using smart contracts. And just to show, this is just what's called the DeFi, the decentralized finance space. There are literally hundreds, if not thousands, of projects within the space. Currently, all of these projects are existing and they have a product or at least a test product out there in the market. So anything from decentralized wallets to the stable coins to identity solutions, derivatives, decentralized exchanges, which is tackling the problem of exchanges that I mentioned earlier. There are all kinds of these platforms that exist out there and too many for me to go through in this talk. So all of these examples highlight the endless possibilities when you combine decentralized money with the smart contracts. So essentially what Ethereum is it's not just decentralized money, it creates decentralized applications. You can use the decentralization for anything, for a lot of things beyond just money. Another way to look at it is it's also programmable money. So instead of just money that you can transfer from one person to another, you can program it to, like the vending machine, set such that if these conditions are met, then I will transfer this much value to this party or to these different parties. And even another way of describing it is it's unstoppable. So even if there is a government or some sort of entity that wants to censor your applications, so let's say you created an app on the iPhone App Store and the Apple blocks you from creating that app, on Ethereum, no one can stop you from creating your app. So you can create applications that are unstoppable anywhere in the world. So next, I just want to go briefly through local companies and communities, very briefly. So some examples that are sort of the pride of Malaysia are two companies, Etherscan that I explained just now. It's the leading block explorer, the library that example that you guys saw just now. It is used by vast majority of the people in the Ethereum space around the world. And it's just a small team based out of Shah Alam. CoinGecko similarly is another small Malaysian company, which is used by everyone in the world, and it allows you to look at the details of different coins, like their prices and their volumes and their developer activity. Similar to if you go to a Bursa Malaysia website and you look at the stock market prices of different stocks. That's what CoinGecko does. And they're also used by people around the world. Hello Gold is a local company that focuses on allowing people to save in gold. And they've been building a feature that uses blockchain features. Neuroware is a blockchain consulting and services provider that have worked with Bank Negara before on some solutions. Blocklime, another one that has largely been doing a lot of education. So a lot of different hackathons or different programs that people can join. And Luxtag is another company that allows people to track sort of whether, let's say, they are Prada bag is a legit Prada bag and not a fake one that's created out of China, for example. Then some examples of communities. So Ethereum Malaysia, which is one I co-organize. We run our meetup once a month, at least on the first Thursday. So you can join. We try and make it as welcoming as possible for not just technical people, but people who are new. We focus on the sort of technical and use cases elements of blockchains. Bitcoin Malaysia is a Facebook group that has 56,000 members, and it covers essentially a lot of things to do with blockchains and Bitcoin. A lot of it naturally will revolve around pricing. The G1 group is a group of very well-connected traders, and it's very highly curated. So they filter a lot of people, but it's a Telegram group that's got a lot of the most experienced people in the blockchain space in Malaysia. Access Malaysia is a body that tries to represent the crypto industry to talk with regulators and entities like banks. The Asia Blockchain Embassy is a sort of a group of different companies and corporations that have said they want to work on blockchain solutions. And Asia Blockchain Review is a magazine, actually, is in Southeast Asia, and they've worked with a few local universities to enhance knowledge of blockchain. So separately from those, a note on cultures within the crypto space, and this is for you if you're interested to go deeper down the rabbit hole. And based on my own personal difficult experience of navigating the space, there are, I would say, broadly 3 different groups. The first group are shills, so people who are shilling their own coin. And it's a natural part of how the game theory of blockchains work, such that if you have a lot of, say, Bitcoin versus Ethereum versus some other token out there, then naturally you will want to pump your coin. You will want to say good things about your coin, because when other people buy, the demand goes up, then the price of your coin goes up, and therefore your investment value goes up. So it's very important to understand when you talk to people in the space, whether or not they are scamming you. A lot of people will be having an incentive to pump their own bags, so to say. So you have to have that filter when you talk to them to understand if they say that, oh, this coin is bad and this coin is good, it might be because they have a position in this coin and not in the other. Much less to say for scams, it will be similar, essentially, because they're pumping their own Ponzi schemes or MLM schemes. So take note when people tell you about this new coin or new token out there. Keep that in mind, because they might just be shilling their own project. A second group are people who are largely sort of seen in the Bitcoin circles, who are like the puritans of the Bitcoin space, and they are resisting a lot of new changes, because Bitcoin is meant to just be money. And if you do a lot of experiments on Bitcoin, then you are creating a lot of potential for errors or for bugs, or for ways for people to attack the contract. So because Bitcoin is meant to be just money, so the culture is to make it very strict, so that we don't accept a lot of these changes, and we are strict and rigid about what Bitcoin is and what even blockchains and cryptocurrencies are. So these are the kinds of people who you would see will say things like, it's Bitcoin, not blockchain. Keep that in mind. Like it's a very valid mentality to have, but if you start talking to them about these different decentralized applications, they might look at you bad or essentially you might start an argument. And a lot of it comes down to having these different mindsets of being very rigid versus being very experimental. So the flip side to that, largely seen if you want to compare between the Bitcoin and Ethereum space, so largely seen in the Ethereum space is people who are willing to experiment, who are going to try to do all kinds of new things with the blockchain. So there's the negative side to this is that by doing all kinds of experiments, you might open yourself up to hacks or bugs in your product. So you can see a lot of Ethereum applications that have had hacks or errors in their code, and people have lost millions of dollars of money themselves. Still, it is not a hack on the Ethereum platform, but on the users of Ethereum. So keep things in mind that there are essentially 3 large groups, and depending on your position and the position of the people you're talking to, it would influence your discussions with them. So to end, we have the so what. So you've heard an hour and a half of me sort of lecturing you about blockchains. What does any of this matter to you individually? So one thing is it's provable by now already. More than 10 years after Bitcoin started and 5 years since Ethereum started, that the technology exists. It's still in early stage, but the technology will be there and it will influence how the world works going forward. So one analogy people like to use is how internet has enabled communications, where before the internet we had to use sort of SMSs or letters, but with internet you've unlocked a lot of ways, even beyond what it was originally sort of imagined. So you have things like Facebook, like Twitter, Instagram, that are powering the internet. Similarly, blockchains have very sort of initial use cases only, and it's really only up to our own imaginations and how we execute on these ideas to see how an internet that combines transferring of money or value in a decentralized way without a trusted third party, how these use cases can exist in a lot of places in the world. It's also an investment, but it's an extremely high risk investment. So you can see how with security, you might lose all your funds. And there is a non-zero chance that the blockchains that exist currently may not be the ones that survive in 20 years time. Like how we have companies like Netscape from the early stages of internet, which are not here anymore. So even if you invest in the current blockchain platforms, let's say Bitcoin, Ethereum, these might be sort of become outdated in 20 years time and lose their value. So understand that it's an investment, but it's extremely high risk. And with that also comes a potential high reward. You also want to look at how it impacts your industry, wherever you're coming from. So any kind of system that you want to reduce the reliance on a trusted third party, whether it's some sort of bank, whether it's some sort of in a supply chain, the various intermediaries involved, if you can reduce the reliance on them, then blockchain is something that can help. And lastly, on this page, from the community, please help us grow. So join us, join the meetup groups, learn a bit more, come up with your own projects, whether you're a programmer, product manager, someone from industry, an academic or regulator, there's always a space for you in this space, because you can see that it's not just about programming or computer science, it's not just about cryptography or economics or game theory or psychology. It's a combination of all these different fields to create this powerful thing that we call blockchain. And one note to this is I showed Facebook just now, and it's an example of a permissioned blockchain. And there are many other corporates or governments who want to do their own closed forms of blockchains. And 20, 30 years ago, it also existed with the internet. There were companies that wanted to own the internet within their own hands. And it was only from the efforts of many people of the open source community, of members of the public, who built on the internet to allow it to be what it is now, that is public and open and anyone can use. So it's a call to action for you guys to join us in this sort of effort to make blockchain open to the world and something that is used for good for the public and not just for selfish interests or for bad purposes. So here I'm shilling my meetup group. So join our Ethereum Malaysia group. Again, after the coronavirus situation has settled down, we hope to reopen our physical meetups. We get guests from around the world and very smart people from the local space. There's a room for you if you're a programmer, if you're not a programmer and you're interested to discuss the more economic or human side of the blockchain. And there's room for you if you're a complete newbie who don't understand any of what blockchain is. I do these kinds of talk regularly on the meetup group as well. One thing I'd like us as a community to do more is to create projects that would help benefit the world and put Malaysia on the map. So if any of these project ideas on the left interest you, whether to do a decentralized chit fund or a kutu, community currency, a community DAO, to do some sort of community insurance, or any other projects that you might think of, I'd love for us as a community to work together for people from various backgrounds, whether they are from computer science, from economics, legal, or what have you, to come together and create a community product that will benefit the entire space. And while it may not benefit or line your own pockets, it can help establish your reputation as well. Especially if you're a student, there are many cryptocurrency or blockchain companies in the world who are looking to hire people and are willing to pay a lot of money. And if you can show on your GitHub page, if you're a developer, or your LinkedIn page, any projects that you've worked on or any hackathon that you've participated in, they're much more likely to want to hire you because they know that you've been in the space and you understand it and are passionate about it. Potentially also, if any of these projects get created and someone wants to take it up and create a business out of it, then the community can be a natural incubator because we have a lot of people who are connected in the space and who may have funds to help provide capital. And if you're not looking to create a company, there's also jobs websites that you can look for. So one of our community members runs this crypto jobs list website where literally there are hundreds of companies looking for people to hire, and you can submit your resume there as well. So to kind of give a go through the overview that I went in earlier, so we covered some pre-introduction or preamble to money and decentralization. We went through some features of Bitcoin or blockchain 1.0, and we went through smart contracts that primarily makes up blockchain 2.0, and some local companies and communities, and the so what. Okay, cool. Then some sort of further reading that you can do. You can take a picture here, and I'll try to make sure I can share the slides later. You'll have to be connected in some way to INCEIF or the meetup group. So yeah, go to the meetup.com or make sure your emails with INCEIF. But so here's a lot of further reading. You can take a picture just for your reference, but my 1.5 hours plus of talk is not nearly enough to cover the entire field. There are many different topics that I've not even touched, and even the ones that I have touched, we can go much deeper in. Since we have a lot of Islamic finance people here, I'll also go through the Sharia view of blockchains. And also, I think one of our members asked earlier. But before that, I just want to end on this page before I address any questions. If you have any feedback on this talk or on myself or on the meetup group generally, you can scan the QR code on the left or enter this in your internet browser, bit.ly/ETHKL101. It will redirect you to a Google form where you can give us your feedback. Any feedback is more than welcome. Please be as brutally honest as you'd like. And if you're not already a Luno user and you feel very excited about buying cryptocurrencies, you can use the referral code on the right side, or again, you can scan the QR code, which will redirect you to Luno. And when you do that and you buy 250 ringgit worth of cryptocurrency, both you and us will get 25 ringgit. And from our side, we'll use it to help fund our meetup group activities. All right, so I'm going to address some of the questions that was asked earlier. And if you have any other questions, feel free to put it in the Zoom chat as well. I'll cover it on here. So the first question is main advantage of blockchain for business owners and customers. So I mentioned this right at the very end just now. It all depends on your industry and how things work there. But for your industry, if there's any part that you are relying on a third party, then the blockchain may not be a product right now that suits you, but the industry as a whole will have, if not yet, will have a product that will address your problem. So for example, if you are an SME owner and you have troubles getting financing, a blockchain product could be created that allows you to create P2P financing, and which is done completely open source. Like around the world, anyone from any country can give you that financing. You don't have to wait on a bank or any sort of big companies that will not be incentivized to lend to you. Yeah, so that's one example. Then Mr. Isaac, same person, also asked about whether blockchains are Sharia compliant. And I'm gonna quickly go back to one of the earliest screens that I showed earlier. So if you go open up this page, the Sharia sort of position, first of all, is quite broad. So there are many scholars that will say this is haram, this is halal. And this is my personal experience only, what I found is that a lot of them who say that it is haram don't understand basic concepts of the blockchain. So like the example I shared earlier, they don't understand that exchanges are not part of the blockchain protocol itself. It's a player on the blockchain and you are trusting that player. So if we ignore those, there are people who have said that this is Sharia compliant. And the logic behind that is primarily that it's not about cryptocurrency. The way it's not about any kind of technology. The Sharia status is about the underlying asset. So even if it's not using blockchains, if you're looking at stock market, for example, what matters is the underlying asset and not the technology of using the stock market itself. So when you talk about crypto assets, there are different kinds of assets, right? So obviously, if the underlying asset is representing some sort of criminal use, let's say weapons of mass destruction or pornography or drugs that are harmful to society, then naturally it becomes haram or not Sharia compliant. If the underlying asset is not wrong, so if it's a registered stock of a company and it's provable that that token really does represent the stock and it's not a synthetic token, like whether if I create a token and I claim that it represents the stock, but in fact I don't hold the stocks that's backing it, then so if I don't hold the stocks, then it's not Sharia compliant. Whereas if it's provable that it's holding on to the stocks, then it is Sharia compliant. And then, so that applies for crypto securities and crypto tokens. It depends on the asset. And if the token is used as a cryptocurrency, then the rules on currency applies. So in Islamic finance, there's this concept called called ribawi. And for any ribawi item, you cannot sort of trade for it if it's not on spot. So for example, if I buy Bitcoin from you using ringgit and both are considered currencies by both of us, then I cannot buy from you at a later time. It has to be on spot. So that means at the same time. So I give you money, you have to give me Bitcoin. Some scholars have expanded it to as long as it's T+0. So as long as it's within the same day, then it's considered okay. But I cannot do a futures contract where I pay you 100 ringgit today and you will only give me Bitcoin that is valued as at 7 days later. Another part of ribawi is that if you wanted to trade the same currency, it has to be like for like. So if it's Bitcoin, it has to be traded for also Bitcoin, cannot be some other cryptocurrency, and it has to be the same amount. So it has to be 100 Bitcoin for 100 Bitcoin. And cannot be, you can't do some sort of arbitrage within these currencies. Another final aspect to crypto assets and their Sharia compliant status is that it cannot exhibit features that are not Sharia compliant. So for those of you who are in Islamic finance, the terms that you already know, like gharar, maisir, riba, like all these things, if it's applicable to the crypto asset, then that crypto asset is not Sharia compliant. So yeah, I hope that helps. Don't want to go too long into that. And so I'm just going to scroll down the questions. If I miss your question, let me know. Let me see. I scroll down. I missed one question that was asked very early on. Okay, so Arif asks how he can create his own cryptocurrency. So you can use the Ethereum blockchain. So like I mentioned earlier, It's created a platform that makes it easy for people to build on top of, to create your own decentralized applications. So if you're a developer, if you're someone with computer science background, you can simply code using this language called Solidity. It's very similar to JavaScript, and you can use a lot of libraries that other people have built to build on top of. If you're not a developer, there are certain tools that have been created, and you can kind of like plug and play, just use the interface. So for example, there is a company called Try-Roll, which allows you to create your own personal token, although they make no guarantees to the legal status of it. So you can use just from their interface, create your own personal token and then sell it off or give it to different people. A better answer to this question is much better for you to just join the meetup, and you can explore different topics or different use cases that the community wants to explore with creating their own tokens. Creating your own cryptocurrency essentially is similar. So you can use again the Ethereum chain to simply create your own crypto token, and you can say that that token is a currency. But the bigger problem for you would be to convince other people to start using your currency instead of using the thousands of other cryptocurrencies out there or our own normal ringgit. Let me see. So going down. So Mr. Eddie Chu. So you're from the real estate industry. I will send over the link to the meetup group in here. And if you're on the meetup.com group, Ethereum Malaysia, then you're essentially in the group already. And whenever we host next meetups, we will inform you so that you can know. And then you can dial in if it's an online meetup, or you can join us if it's a physical meetup. Mr. Ibrahim asks how Blockchain Village at Medini can collaborate with Etherscan. You can send me a message on meetup.com later on my account. I already know a couple people from Blockchain Village. So for example, Aaron Ting. And yeah, but that's outside of the topic of this talk. So Ibrahim asks again about ecosystem of a blockchain industry. I'm not sure what that means exactly. There's many different so the ecosystem as a whole has many different components. So there are different blockchain protocols and platforms. There's different use cases, different product use cases. Yeah, I need to know a bit more about what you mean by this question to answer it better. You could use the slide that I showed earlier to give you a sense of not necessarily ecosystem, but the different cultures that exist within the crypto space, the three broad groups psychologically that you can see. I'm gonna keep this page up so you can still scan these codes if you need to. Okay, so last question is how to register for the meetup. Okay, let me open that link for you right now, and you can just simply join it there. So give me a sec. So I'm gonna send it in the Zoom chat. So so it's meetup.com/ETH Malaysia. That's ETH Malaysia. So you can open up that page and just join the group. And yeah, so on that note, I might as well share this link to the feedback form, the full link. So you can just click on this docs.google.com link to give your feedback. And for referral, you can also just I'm gonna send the link directly so it's easy for you to click on. So that will be this link here. Okay, cool. So if there's nothing else, we're already almost 2 hours since the start of the talk. I hope this has been beneficial. And yeah, you can join the meetup group and ask questions there. We have also a Telegram group, which the link is inside the meetup.com page. You can join and ask questions there as well. Or you can ask INCEIF, and we can coordinate answers there. And if there's interest, we can also do other topics around the blockchain. Could be one of these many topics that exist. Yeah, so feel free to let me know how you'd like to participate, and I'd love to see more Malaysians join the blockchain community, and not just to make money or to to trade, but also just to understand the technology itself and create our own use cases that can benefit Malaysia, can benefit Islamic finance if you're from that space, and even just benefit the world. So on that note, I will end. Hisham, if you have anything to add to end the session, otherwise, I'm okay to just end the call here. Thanks, Khalid. Thanks for spending your time. And yeah, please let me know your feedback to see how we can improve it later. I just realized the link that I sent was only to one person. So I'm gonna send all 3 links in the group itself for you guys, for the others to see. Yeah, okay, so that's there for everyone. Yeah, okay, so thank you everyone, and I will end this call. Sorry about that, Ayman. Yeah, so you can see that now. And I will end this call in a few seconds just for people to be able to copy and paste the links that I just shared. Yeah, thank you everyone, and hope to see you at our meetup next time. Bye. Assalamualaikum.